mutual fund and hedge fund. Mutual fund is legal and hedge fund is something illegal. Mutual fund means a registered company. They have to take the registration. Mutual fund registration is also done by Securities Exchange Board of India. A company registered with Securities Exchange Board of India, they are collecting money from different participants. Using that money, they are trading in the stock market. When profit comes, they are sharing the profit. When loss comes, they are sharing the loss. A legally registered company doing this activity is known as mutual fund. Hedge fund means same thing, illegal. For example, I made a WhatsApp group. In this WhatsApp group, I told you that if I want to purchase a land in Dibrugarh for 20 lakh rupees, I'm sure that I can resell it for 30 lakh rupees within 1 or 2 months. Then the 20 people in my WhatsApp group, everybody contributed 1 lakh rupees and 20 lakh rupees. I purchased the land. When I'm selling the land, after some times, I might be able to sell the land, might not be able to sell the land. If I am able to sell the land for a higher price, I will share the profit for everybody. No registration. If I am cheating you, you don't have any legal solution because you went through an unregistered person to invest. Something which happens informally or illegally. Illegal mutual fund is called as hedge fund. Mostly the hedge fund people are investing in the real estate, purchasing land, purchasing a building and reselling that. And mutual fund raises money from investors to invest in stock market is legally approved, and hedge fund raises money from non-people to invest in the real estate. This is something functioning illegally, not legally sanctioned. Next one, market signals. All of you know bull. What is a signal bull? Bull is the market is going up and bear is market is coming down. Bull means that the stock market is optimistic. We have hope in the stock market. And the bear means stock market is pessimistic. We don't have the hope and we have no hope, disappointment in the stock market. Next one is venture capital. Sometimes you might have seen that recently, large number of the startup businesses are coming up. Somebody having an idea, he's starting up a business, he's getting sometimes the investment from the investors. Huge investments are coming to the startup businesses in India. Education startup and different startups, the courier service, Delivery and Ecom Express, all these are examples of the recent startups in that sector. In every sector, you can see the new startups are coming. People are funding the money and too much fund is coming. Some startups become successful. Some startups are becoming a failure. Now, do you have the courage when somebody is telling that I'm going to start up a new business, a new idea I'm starting up in Dibrugarh? Do you have the courage to invest in the money in that? You don't have. Why? You don't have money. But the people who are investing in these startups are the well-off investors. They have too much money. Crores and crores of rupees is there with them. They don't know what to do with the money. Such capital, that is a money invested by well-off investors in a startup business, is called as venture capital. Now, these investors are called as angel investors. What is angel? Angel means that the belief is that angel is a superior being, comes with the blessings. Yes or not? Similarly, for a startup business, what is the blessing for a startup business? Money. The business was wanted to start up and the money was required. An investor came with the money and gave. Then for the business, that is why such investors are called as angel investor. The money they use to invest is called as venture capital. Government of India sometimes charges a tax on the venture capital. The tax on that is called as angel tax. Imagine one company is there. That company's total value is 20 crore rupees. One investor is investing in that company 30 crore rupees. That means the company's total value at present in the market is 20 crore. Then company has a plan to make it as a 100 crore, 200 crore valuable company. Then they are taking investment from an angel investor of 30 crore. Then for the last 10 crore, the amount of investment coming above the total value of the company has a tax, is called as angel tax. Then you understood the concept: venture capital, angel investor, and angel tax. Venture capital investment for startups expect long-term growth potential. These investors, they don't want money, the profit soon. They want the profit after a quite long period of time. Well-off investors having too much money will do that. For example, investment banks, financial institutions will be doing. Facebook does lot of venture capital in different startups in India, and investment banks like IDBI, they do the investment in the different startups in India. Next one, after venture capital, Ponzi scheme. What is Ponzi? Who was Ponzi? See, Ponzi scheme, sometimes you also might have experienced some Ponzi scheme. I can tell my experience. When I was in the college, one of my friends doing the graduation, one of my friend, he was junior to me. He came to me and told me that, Sajid, how much rupees your father gives you monthly? I told him 500 rupees. That time my father used to give me every month in the beginning 500 rupees, and I can ask the money again only after the next month, 1 month finishes. That time 500 was enough. Then he told me that, ask your father to give you 5,000 rupees once and forget. You are complete until you finish the graduation. I will give you 500 rupees. I asked him how. He told me, I have an investment plan. You can invest the 5,000 rupees with me, and there is a guaranteed 500 rupees profit every month. That means in a year, I will get more than the investment, 6,000 rupees profit. What do you feel? Being a smart person, I should have invested with him. I should not have invested with him. Anyway, I did not invest with him. But he did. Many of my friends joined with him. And somebody, when they were getting the more money and they sold some of their small instruments, again they invested money with him. After a few time, in the second year or third year, one day he disappeared. There was no news about him. How he did? Today, he's adding me as a member. He takes from me 5,000 rupees. From my own 5,000, he will give me 500 rupees. With the remaining 4,500, he was going for party, luxury life for him. Next month, he is giving me an offer. You bring 2 more members into our club. If you are bringing 2 more members into the club, and your income will be increasing from 500 to 600, then I am getting money. I will tell 2 of my friends, you have an opportunity. You go with 5,000 rupees and deposit with him. Trustable person. He will give you 500 rupees monthly. I have the experience. I got it last month. Next month, both of them gave him 10,000 rupees, 5,000 each. From that money itself, he has given both of them 500, 1,000. He gave me 600. Still 8,400 is for him. He will have a luxurious life with the 8,400 rupees in a month. Next month, all the 3 of us will be given the task. You bring 2 more people, then your income will increase. My income will increase into 700. Your will increase into 600. You will bring 2 people. I am also bringing to 6 people came. From the 6 people, he is getting 30,000 rupees. From that 30,000 rupees, he is paying everybody 500, and there's 3,000 gone. And both of you 100 extra for me, 200 extra. Still some 4,000 is spent. Remaining 26,000, he is having a luxurious life. Then his income was increasing. Sometimes 1 lakh comes to him. He has to spend only 20,000 by giving everybody's share. But finally, it will reach into a point that the new members are not joining. At that point of time, he will disappear. And he disappeared. This idea, this model of business, or the fraudulent business, a fraud only, without doing any business, cheating the people. This type of fraudulent business was first started by an American citizen named as Charles Ponzi. That is, it is known in his name, the Ponzi scheme. Ponzi scheme is a fraudulent investment scheme. Higher return is given for the investors, and paid from investors' own money. The first person to do such a scam in the world was Charles Ponzi. Then he became famous in the economy, and in his name one scheme came, Ponzi scheme. Next one, after Ponzi scheme, sweat equity. What is sweat? Yeah. When you do the hard work, going under the sun, you will be sweating. Sweat, is it a symbol of hard work? Sometimes your parents, when they used to give the money, and they will tell you that this money I have earned by my sweat and blood. And now the new generation, they don't sweat, they're sitting in the air conditioner and earning money. And it's the old era, you have to go out, and now also people are there, but we have to be smart enough in the life. Never earn the money by sweat in future. You have to earn the money by the hard work, but that should be a smart work sitting inside a comfort zone. Coming to our point, sweat is a symbol of hard work. Imagine there is an employee in a company. The company is sure that because of this particular employee, company is able to make huge profit. Then the company will have a fear one day whether this employee will switch into another competitor. To prevent it, company tells him that we are offering you 5% share in our company. That share we will either give you free of cost, or we will give you the share by 50%. If the total value of the share is 50 lakh rupees, by giving 25 lakh rupees, we will give you the 5% share. When an employee feels that I have a share in this company, he will not have a tendency to shift into another company, because if this company collapses, his share also will collapse. Then to prevent the switching off of employee, or to reward the best performing employees or the most crucial employees in a company, companies are offering shares at a discounted price for the best employees, is known as sweat equity. That equity he earned because of his hard work, because of the sweat he has given to the company. Then sweat equity share to company employees at a discounted price is called as the sweat equity. Next one, qualified foreign investors. Yesterday I told you that a foreigner, can he invest in India directly in Indian stock market? Every foreigner cannot invest. If a foreigner is coming from a country that has signed which agreement? If a foreigner is coming from a country which has signed an international agreement, FATF, Financial Action Task Force. I told you that Financial Action Task Force is a agreement to prevent terrorism financing, one, and to prevent illegal money laundering, another one. Then if a country has signed, India has signed the FATF, if any other country, whatever countries have signed the FATF agreement, if their citizens are coming, they can directly invest in Indian stock market. But if a citizen from a non-FATF country, he cannot directly invest. He has to come through qualified foreign investors in India, qualified foreign investment company in India. Now, the members of the FATF signed countries are called as qualified foreign investor. They are qualified to invest in Indian stock market directly without an investment institution. Then the qualified foreign investors means, and they are the FATF signed country citizens. After 2012, they can directly invest in Indian stock market without going through any institutional investment company. Before 2012, every country's citizens had to go through a registered investment company. And after 2012, we have given an exemption to the citizens from the countries which are signatory of FATF agreement or the Financial Action Task Force agreement. Next is participatory note. I have given you a brief on participatory note yesterday. Participatory note, or the shortly it is called as P note. When a foreigner wants to invest in Indian stock market, and unfortunately he is not a citizen of FATF signed country, then he has to first approach a foreign institutional investment company registered with SEBI. He approached that company and he discussed with them, I want to purchase this much shares of Adani, and Adani Wilmar, Adani Power, Adani Green, anything, whatever it is. The company told that, yes, we will purchase it for you, but you invest the money with us. When they invest money with the company, the individual foreigner who is investing money with this company, he should have a proof and evidence of investment. Then the company gives him a paper. That paper is called as an evidence, a receipt. We can simply, when they receive money, a receipt is given to him. That receipt is called as participatory note. That tells this foreigner has participated in Indian stock market through us, this particular company. That is the meaning of participatory note. Participatory note is issued by registered foreign institutional investors to the overseas investor, that is a foreign investor who wish to invest in Indian stock market. Next one, credit rating agencies. I told you earlier, like NAC. NAC is an educational rating agency. Similarly, in economy, we have different credit rating agency. Credit rating agencies are looking how far this person or this company can be trusted while giving loan. They make that study whether this company is a blacklisted company or the company can be trusted by giving a loan. This particular individual, what is his track record? Earlier, whatever loan he has taken, he used to pay back on time, or he used to make some irregularity in making the payment. That is studied by credit rating agencies, and it is regulated by SEBI. Credit rating agencies are coming under the regulation of Securities Exchange Board of India. That it checks credit worthiness of a borrower, whether he can be trusted while giving the credit or loan. The first credit rating agency in India was CRISIL. CRISIL was established by the International Credit Rating Agency. Standard and Poor has established the CRISIL. Another important credit rating agencies in India are one, Credit Analysis and Research Limited Rating. CARE is another important credit rating agency. Next is Small and Medium Enterprises Rating. Phonicra is another rating agency. Fitch India, ICRA, Indian Credit Rating Agency, and Brickwork Rating are the examples of the existing credit rating agencies in India.